guys ready? No? You guys aren't ready? All right, I'll wait. Let me know when you're ready. Some people are ready, but 99% of people are not, so I'll wait. Yeah, boy! Lucas says we're ready, then we're ready. Yeah. Hey, good morning. I want to start off by saying peace on earth to everybody. Peace brings prosperity. So anyways, peace on earth. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Thank you for your positive contributions to this community. I appreciate you and the hard work that you're putting into this thing called Forex. I am your humble servant. I've been doing Forex for approximately 20 years. But besides that, I've been a human going through this existence, and I've learned a few things so I can share. That being said, let's talk about Forex. Forex is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So thank you for being here. Let me know how I can help. That's basically it. That's my message to you. What can the Wayne do to help you? Let me know. Technical analysis. I love technical analysis. I love scalping. I love spot trading. I love swing trading. I love carry trading. I love position trading. I'm a macroeconomist by formal training. I have also a background in finance, both through education and experience as a venture capitalist and investor. So cool, all of that is fair game, but mostly I've been sitting in a chair for the last 20 years staring at charts. I did pass the Series 3, which is kind of interesting, so if you're interested in that side of the beeswax, then feel free to ask. That's, you had to answer questions like, how would a grain elevator operator hedge prices today based on their future expectations of prices in the future? And that's what the Series 3 is all about. And yes, as a Forex trader in the United States, you are required to pass that exam, even though it has nothing to do with Forex. Close enough for government work, right? So anyways, ask questions, get involved, and I will do my best to help. I'm here to provide some of my experience and, of course, advice, not necessarily put you into trades. I'm not giving you a trading piece of advice. I'm not giving you financial investment advice, but I am here to teach you how to make your own decisions. I also provide advice like, I think you should open an account at tradersway.com. They earn my loyalty and respect, and I recommend them to you. You should give them an opportunity to earn your loyalty and respect. Yes, they have fast execution speed, narrow spreads, wide swaps. Cool. But the thing is, when the Swiss National Bank blew up the Forex market back in, I don't remember what year it was, they put big brokers out of business. And Traders Way was just absolutely perfectly fine. And I'm like, wow, that's the type of trading partner I need. And of course, if you look at Forex like a business as I do, then they are an execution partner. They're a service provider to you. And if you like that type of, I don't know, stability, that's one way of looking at it. But then you ask, well, why did the other brokers go out of business? And if you think it's because maybe those other brokers were trading against their clients, then you're like, well, maybe Traders Way doesn't trade against their clients. And I like that. So whatever, tradersway.com. Also, the link is in the description below, by the way, but there's links to FX Bootcamp, which is my community outside of Forex.Today. It's $88 a year. Link is in the description below. I wrote a book 15 years ago. The link is in the description below. My chart templates, if you like them, the link is in the description below. So on and so forth. So hey, hint, hint, wink, wink, nudge, nudge. Look in the description below the video. You might find something that appeals to you. And everything there was created because people in the Forex community asked for it. Okay. Hey, there's Scottie Pippen. Okay. Cool. Steve says, hey, from your teaching, I've had carry trades on since the 20th of January. Yeah, sweet. Well, now we're challenged with the risk off, but let's, so how many people here want to talk about the Russian invasion? Nice coffee. Hey, Maida, did you get the emails? I made the adjustment you requested. Johnny says, just risk off, not the invasion. Right, yeah, I'm not going to go into the history of the Crimea. Right, and the importance of Belarus, by the way, which is kind of interesting. Bum, 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 bum. Okay, cool. Yeah, a few people. Yeah, all right, cool. Well, there's a threat to macroeconomics right now. Things like war is very, very inefficient. One way of looking at it is when you go into war, you break things. It's very unproductive. Now, recovery from war is very productive because now you got to fix things. So when you look at post-World War II, for example, Europe had huge GDP growth. Well, because everything was broken. So you had to rebuild things, and rebuilding stuff is very productive. But in the short run, let's say as you are blowing things up, it's very unproductive. And so that's a threat. Then there's consequences like, will North Africa get wheat from the Ukraine? See, the Ukraine produces, or let's say is one of the largest wheat exporters in the world. It's considered the breadbasket of Europe. But the thing is, Europe doesn't need Ukrainian wheat the same way Canada doesn't need Ukrainian wheat. Why? Europe has its own wheat. So who gets Ukrainian wheat? North Africa, for example. So if wheat prices go up, food prices go up, and then there's a starving family in some small town in Algeria. I'll pick a random country, right? And that household will be negatively impacted because they have food prices are up, so they'll have less food. Okay? But will that last long term, or would it be just one season? Well, maybe it's just one season, but you can see the cause and effect of that. Also, Germany imports a lot of energy from the Ukraine, and Germany is Europe's largest trading partner. Now, France has a lot of nuclear power. So France would be less negatively impacted, but Germany will be more negatively impacted by that. Okay? So that's on the short run. So energy supplies down, let's say, prices up. And I've described that. So look for oil prices. And by the way, last night in the day trading group, oil was at about 94. And I discussed for about probably 20 minutes the relationship between Brent and crude and the spread, and how that showed that there was different market participants in the market. Another way of looking at it is risk premium was being added by non-energy traders, and that it showed almost inevitably that we're on our way to $100 a barrel and beyond. Well, then I wake up in the morning, boom, look, we're at $100 a barrel. So we can talk about that, but that's what we did last night before it happened, which is kind of interesting. So those types of things would likely to continue. Now, again, some of the consequences of the cause and effect is now, what is the ECB going to do? If there is, now that we have the invasion, that could slow productivity in Europe because that war will not increase productivity. So the risk now is productivity, aka GDP, in the Eurozone would fall. Okay, certainly won't rise. So the risk is it won't stay the same. So then maybe it will fall, right? Now, on top of that, if oil and energy prices are high, natural gas prices are high, then what? You have slowing growth and increasing inflation. Okay? Okay? You see all these things? Cool. So, let's take another look at what's changed. And then we'll go into the charts and stuff. This is the Fed Watch tool, and this shows how Americans are positioning themselves for interest rate hikes in the future. Okay, a month ago, 3% of America was pricing in 50 basis point rate hike in March. 1 month ago. 1 month ago, 3% of Americans, smart money, banks lending money to other banks, and based on their assumed future rate increases, okay, we're negotiating loans to each other. So it's smart money lending money to smart money. 3% of them 1 month ago were lending money based on the assumption that the Fed was going to raise interest rates by 50 basis points. 1 week ago, it was more than 35%. It went from basically zero to basically 1/3 of all deals a week ago were being negotiated as if the Fed was going to raise by 50 basis points. Today, that is way, 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 way down again. And this will likely fall even further today. And now, right, there's about a 90% chance, because I'm pretty sure when the bond markets officially open, this is going to drop even more to probably zero or near zero, probably back to 3%. And this will be nearly 100% that the Fed will only raise interest rates 25 basis points. Now let's read the tea leaves. What is the smart money saying here? that growth is going to slow. Growth is going to slow down. Or the risk of slower growth from higher inflation is bigger than the risk of higher inflation, and that the Fed needs to do something, needs to raise interest rates, but maybe now is not the time to do the shock and awe type thing. Now, what have I been telling you? That it could happen, of course, but the Fed has said, remember, I don't like opinions, I like conclusions. The Fed has said steady. And in my interpretation of the English language, that does not mean, right, a big hike and then small hikes. Well, that would not be steady. Nor does it mean stop and start, stop and start. So what I was saying earlier, there's really two suggestions. They raise in March, okay? They raise in June. Then they pause, and then they raise in December. But that was back before we had 7.5% inflation, right? And then that was before these guys said steady. So what's the translation now that we got ripper hot inflation and they've told us steady? What does that mean? Okay, well, the reason I say no summer rate hikes, or earlier, right? Remember, like, let's say 6 months ago, I said they wouldn't raise in the summer and they wouldn't raise in September, although you think they would, but we have an election in November and they don't want to jack up interest rates, right before the election because they like to stay apolitical. But what if you need to? So here's the thing. Here's what the steady says. If they raise every meeting, okay, every meeting, even through the summer and even through the political election, they're not making changes and adjustments that would potentially impact the election. Okay? And I think that's what you're starting to see. Now, how do you look at that? Okay, so this says March, interest rates go to 50%. May, we go to 75%. June, we go to 1%. July, 1.25. September, 1.5%. November. Okay, November we're not so sure about. Now we're getting split. That's the election, by the way. Okay, and now by the time we get to the end, it's very, very, very split. Some people think we're going to stop at 150. Okay, almost 1/3 of the market if you add up 21, 6, and 1. Okay, 35% of the market thinks we'll be at 1.75 in December. But if we're at 1.75 in November, then what they're saying is 1/3 of the market says they're not going to raise in December. They're going to stop, that they don't want to hit 2%. Okay? What about February? Okay, again, more than 1/3 of the market thinks they're not going to hit 2%. That's priced in today. No rate hike in December, no rate hike in February. Let's go all the way to June. Okay? Okay? And you can see 23 plus 13 plus 4. Okay. Lots of people are thinking, 2%, not even 2.5%, right? So maybe we get to 2% in 12 months. Well, 18 months, let's say. Maybe 2%. Maybe. So it's interesting. And these things are fluid. They change all the time. And they're going to change again. Cool. On the calendar today, GDP. Okay. Here's the scalping we did yesterday. I continued with it. I played around all day. So yesterday we had scalped this up. Then we brought it down, do you remember? And I identified this level here. And it fell even further. And then we identified this level here, 83.27. Okay, and so we watched it come down, 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 down. Then what did it do? It hit our number, it rallied back up, and then hit that number, which we had already marked hours earlier. And then it dropped, 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 dropped. So I played around with it all day. It was great. Sat outside, right? And then, so I just sat outside with my laptop, smoking a cigar, watching a 1-minute chart and a 5-minute chart. Okay. Alexander, I'm not sure what you mean by my opinion. I don't have opinions. Is it happening? Yeah, I think it's happening. Okay. But anyways, so, okay, we're looking at this. And so remember yesterday, we said this line is important, and then this role reversal line is important. Let me go back to yellow. Yellow works really well here, right? We have this as support. Remember, it was falling. And then we had this as a re-entry. And then all day, it was like down, 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 sell, down, 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 sell, down, down, down. Anyway, so I did that all the way into the Asian. I left those short. Okay. And then even on this 15-minute chart, because remember, we were doing this on like a 5-minute chart and a 1-minute chart yesterday. So obviously this is a much more time than that there was probably 20 trades in there if you were scalping, okay? Then we consolidate a little bit until Asia opens. And the methodology I've been teaching, you trap it on the first 90 minutes of trading. Okay? Now check this out. Breaks out of the range, breaks out of the box, comes back, role reversal. Nice. Now we're down here. Okay. Here's the thing. Be careful when you're watching the news. Be careful when watching the news. There's a lot of panic in the streets. This is a very bad situation in Ukraine. But if you're not in the Ukraine, then you need to stay focused, stay calm, and do your job. And when you become a professional, people will rely on you to be the calm one. So what I look at here is, yes, it fell. Yen getting strong makes total sense. By the way, this was the weekly and daily exit. Okay? Like this drop makes sense. It does. It totally makes sense. And then the technicals change and it just keeps you sell, 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 sell. Then war happens. Geopolitical risk goes to geopolitical crisis. And the end of the world is near. Except a fall from here to here is not a big deal. And it happened at exactly the right price. And then we get the situation, and then it happens. But is it out of control panic in the streets? Dude, we triple bottomed at exactly our weekly M3. This is not panic in the street, fellas. It's not panic in the street. And when you go through the charts, you'll see there's lots of logic going on. Don't get over-amped. Just do the job. Okay? I hope you see that as sound advice. Okay? This is not out of control panic. This is logic. People are respecting prices. Things are normal. Okay? So, let me give you an example of this normality. On the first day of the week, there were 2 bullish entries. This one and this one. And they predict a top of right here. Look at profit target conservative. This is based on what happened last week. I'm not making this up on the short run. It was one of the reasons why this move was so interesting. So now that war has hit us, what did we do? We just went right back here and we stopped. We also are using this as resistance. Like, oh my gosh, guys, these are the numbers that the algorithm drew based on what happened last week. It's not panic. It literally has stopped, right? It's literally stopped the market. The market didn't just plow through this. Now, we may move beyond this area, but the fact that, right, that we're respecting these levels now shows that there is logic in place. And so if you feel emotional and amped up, be careful, because I don't believe the market is. Okay? Yes, things have changed, but don't freak out. Okay? Cool. Okay? Isn't that cool? Down, down, down. Oops, I like yellow on this. Down, 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 up, up, sell. That's what I taught you 24 hours ago on a 1-minute chart. You're welcome, by the way. Right? And if you see the rinse and repeat, worked out really nice. Okay? Been working with the day trading group a lot recently on trapping. And so it was cool to see this in Asia. Okay? Asia broke out, came back, and gave you the perfect trade. Beautiful. That's how you do it. Okay? Then you look at this old low, gives you kind of a general idea for a high. Europe opens high, gets trapped here, gets trapped here. Okay, notice that Europe didn't go higher. That's the issue. If you're only thinking bearish, you're only thinking bearish until it starts making higher highs. So when you're up here in Europe, you're thinking, oh yeah, this is going to get interesting. Okay? And then you can see, you could even kind of move it down, move it down, move it down, move it down, each time it fails to make a higher high. So at some point, it's probably going to do something like this, is what the chart is saying. Not that it will. If you're ignoring pivot points, which this is not technical, I mean, it's trading technically, but, you know, a new fundamental information like war is not a chart-based scenario. Do you understand that? It's not an oscillator. It's fundamental. Risk off is a fundamental mode. So you can exit these pivots and say, well, last week's market is now irrelevant to this week's market, because this week now has something radically different than the week before or whatever period you're looking at, right? Cool. But still, the market is using, so maybe you don't go under your standard operating procedures of buy this, sell that, buy this, sell that, buy this, sell that, right? Like you can just say, well, these are key and important zones that you need to be aware of. Okay, so don't panic, do your job professionally. Okay, so that's what we did yesterday, and it worked out epically good. You're welcome. Okay, cool. Oh, I didn't want to do that. I want to get to commodities. So the thing we talked about yesterday in the day trading group, again, yesterday, and you're like, man, that would have been helpful. Then join the group. Right? Just join the group. Anyways, one of the things we're talking about is the spread. So I think we're about here. The spread between Brent and WTI. And that it had narrowed, and that basically pointed to new people coming to the market finding a risk premium because they were worried about a move beyond, outside of normal demand and supply economics that go into the energy market. That's your normal market participants. But that there were more people in the market because they're like, oh my God, if Russia attacks, oil prices are going to go up. And so as a hedge, you buy oil futures, right? You see that? So the unusual spread pointed to something unusual, okay? And that we were talking about, that'd be interesting because, you know, we have this $100, which we knew was an issue. And then WTI, its projected top was about $100 as well. So WTI and Brent both said, Brent both said $100. If you looked at weekly and monthly pivot points, they both said we're going to go to 100. But the problem is, if WTI is going to 100, then Brent is going to go higher, because there's typically a spread between the two. And they had narrowed because they were trapped under this psychological level. And remember, psychological levels have nothing to do with reality. Otherwise, we'd call them something different than psychological. So we're like, this is going to break, man. This is going to break. So what I did last night is I said, look, normally you would use these monthly pivots. So the monthly pivots said this was going to be the top for the month. So what I did is I said, okay, well, that's based on last month, but that's not what's happening now. So to stay more relevant, you can remove the monthly pivots. And we did. They're no longer on the chart, where I'm like, this is not the technical top anymore, because that's based on what happened back here. But that is no longer relevant because this didn't have the same type of risk premium attached to it. Less people were hedging a month ago because we were, you know, there was maybe a threat out of Russia. But then by the time we got to last night, we're like, yeah, this is like legit. Okay. So I'm like, kill the monthly pivots. And I'm kind of suggesting that on the other market too. I think we're looking at Aussie yen. And I'm like, you know, we're respecting the numbers, but don't use the normal model. Right? Don't use the normal model of like M2 to M4 or something like that. And in fact, almost everything we trade, since it's so late in the month, we're done most of that anyways. and we're trying to set up next month. Okay? So you can kind of kill, or let's say, respect the price levels, but don't trade it under the normal assumptions of, oh, look at this, I got this pivot, I'm supposed to buy at this pivot. No. Okay? If price is respecting them, then respect them, but don't use them in that same way, because you should respect the new flow of capital. Okay? Europeans are probably freaking out right now, institutional investors in particular, and they're going to move their money to Switzerland, right? Okay? So what you don't want to do is say, oh, that's a support pivot, it's going up. Dude, just respect the flow of capital. Okay? Someone in Europe panicking, moving money to Switzerland as a safe haven, they don't give two hoots about your stupid monthly S1. Like, monthly S1, dude, move my money to my Swiss bank account. Okay? You see? So more like respect it, like it's going to bounce here, and then it's going to come up, and then it's going to go there, and then you can say, well, traders are clearly respecting these pivot levels, right? Okay, look at this. Not only is this the projected top for the month, okay, and we started at M2, we hit it early in the month. What does this set up, guys? When you see this, this is a test for boot campers. Boot campers, when you see this, February 4th, we hit target. What's your instant instinct? Okay. Okay. The answer here is counter trend towards the central pivot. And that's because of obvious profit taking is about to occur. Now, if you are sitting there and you're like, wow, I had no idea, you need to become a boot camper, because clearly people here know this. Okay? Now, what about the bearish swing here? Okay? That targets 10359. Okay? Targets this price here. Oh! Okay? That's interesting, right? By the way, this is a sell zone, roll reversal, swing short. Okay? Sell zone, roll reversal, swing short. And we're working our way down. And the ultimate target is here, technically, but what I want you to be aware of is this is a fundamental trade, so be careful. Okay? I can tell you somebody's short off this top. This is a basic price action. So if you attended yesterday's 3-hour workshop on scalping and price action, you'll understand the basics of what you're looking at. The basics, I mean, again, we have assumptions on what it will do, but the basic part is you should know what to do. You don't know the outcome. You don't know what the market's going to do, but you should know what you're going to do. And as far as selling here, that's unbelievably classic. And the assumption of that trade is down here. Okay? Now, if you're not doing stuff like that, you have room for improvement. Okay? Cool. Okay. Look at that one, huh? Holy schnicker-schnocker. Look at that. Oy vey. Okay. This is broken out, but what is this? This is the most important piece of this chart right now. You say, Wayne, how far is this going to fall? I'll say, I don't know, but using technical analysis, it's going to fall to 1.2206 about. About. That's what it says. It's not my opinion. Like, I don't know where it's going to go. Maybe it'll bounce out. Maybe it'll bounce here. We'll range from there. All right, cool. But what the chart says is this is going to go to that. Brinsley says, use the pivots and price action. That's all I actually do, right? I'm a two-pony show. Okay, price action is obviously price-based, right? And pivots are market-based. Okay, okay, so we'll do that again just to make sure. Okay, let's do this. Market. Let's do a different color. Let's do this. Let's take this even further. Let's rip up the script. Okay, there's two things I look at. Market and price. Okay, so under this, how do I separate these two forces? Okay, I look at macroecon and I look at technical analysis. Two different things. Okay, the second thing is I use for market, right? Pivots, okay? And I use price action. Okay, for market, I use MACD, slowed down. For price, I use stochastic, sped up. Okay, for market, I use 21.55. For price, I use 5.8. You notice the theme here? I'm using these tools in very, very specific ways. And I'm not saying one is better than the other. I say you should have a healthy understanding and appreciation for both in your analysis of whether you should be buying and selling. And it'll help you find out what price you should buy or sell and at what time. Okay? So technical analysis is the study of price and time. Okay? And fundamental analysis is the supply or the study of money supply and cash flow. How much money is there in every economy? And where is it going? Because if money doesn't flow over a border, it doesn't change the value of the currency. Okay? Is that right? Yeah. Yep. Cool. Did you click the like button? I mean, that was good, wasn't it? That was helpful, wasn't it? Didn't drop it. Cool. Here's GDP. Okay. Quite productive. Anytime the Fed puts a gray area, that's recession. Okay, these are all recessions. Shows you how big COVID was actually, huh? Closing an economy apparently is very unproductive. Well, that's war closes an economy and destroys everything. Okay? Here's the global financial crisis. And all these other recessions seem almost pointless, huh? Okay. So one important part of all of this is if a company wants to build a brand new, giant, modern factory, where does it get the money? Okay. By the way, companies don't spend money, they invest money, right? So if a company decides it wants to invest billions of dollars in an effort to double productivity, meanwhile lowering per unit cost, which is microeconomics, where does it get the money? Loans. They call up a banker. Okay. Okay, where does the banker get money? It's not the banker's money. Where does the banker get money? Savers. Okay? Savings is equal to investment. And yes, you're thinking this does solve the asymmetric information challenge. You're correct on that one. But here's my point. When you see GDP like this growing over lifetimes, you're looking at an economy that has banking. If you look at an economy that does not have a trustworthy banking system or a social structure that people just don't use banks, they're so poor that it's just not part of what their life, right? Like, it's just they don't have a bank. Okay. So what's interesting is what little money is left over, they save it by putting it in a coffee can. And it doesn't grow. It just comes out of the money supply until they go to spend it. And the thing is, it's unproductive money because it doesn't lead to investment. And what does investment do? Produces return on investment, which is the same as saying new productivity, which means growth. So now you have more money because you're more productive, so that company can now sell more widgets and gadgets, hire more people, but have more money. So hiring more people is a form of investment, and now more people have money, more people save to lend to the investors to increase return on investment, which creates productivity, which creates more growth, which leads to more jobs, which means to more wages, which means more savings, which means more investment, which means higher return on investment, which means an increase in productivity, which creates an increase in growth, and the rich get filthy, stinking rich. And that's that. So it's pretty interesting here, right? So one of the consequences of Russia invading is the condemning world may remove Russia from the SWIFT system. And that will cut them off. It's like a financial embargo. No money can go into Russia, no money can get out of Russia, which means your Bitcoin is probably going to go to 1 million. We'll see. We'll see if that happens. Because suddenly there are lots of Russians that would love to get their money out of ruble, get their money out of Russia. And if the SWIFT system is shut off, what that means is you cannot wire money. A SWIFT system is a coding system in which Bank A in country A is talking to Bank B in country B. And the SWIFT says, let's MT, XXX. Bank A sends a message to Bank B's banker on the deal and says, hey, banker, our client wants to initiate a transfer to your bank. Please let us know if you're ready to receive. And then they're like, Bank B says, yes, we're ready, willing, and able to receive. And then this one sends sort of like, okay, confirmed, this is what we intend to do. Are you okay with this? And then this one goes back and says, yes, we are ready. We are RWA. And then this transfer is initiated. And then these guys say, yes, we got it. And then we confirm that you got our message. And then the transaction is completed. And that's the SWIFT banking system. And they're the little messages, and it's truly banker to banker communication. Okay? And to cut Russia off from that, that means no money through bank wires can enter Russia or leave Russia. And that would be big. So, hey, pay attention to crypto. Because what would you do if you were a billionaire and you got money that can't leave? Hey man, you're a billionaire. You got a lot of access to resources, right? You're like, I need a crypto nerd. Somebody get me a crypto nerd. Right? So anyways, follow the money, honey. There'll be no internet in Russia? I don't know about that. Okay, I didn't say that. Anyways, going to my WTI, this is what we were talking about yesterday, and goes back to the conversation that we had about Brent, where I said Brent and WTI had this idea where we had weekly targets, that light pink, and then this one here is a monthly target. And I'm like, well, if Brent is going to go above 100, then this is going to go to 100 and all that kind of stuff. And now we have more of a normal spread, right? More like $4 instead of $1 or whatever it was last night. And if you recall in Brent, I wrote down remove the monthly pivots because going into this trade, it's no longer a technical trade, it's a fundamental trade. So you can go into your indicators and you'd kill that, and now you have a new target. Just remove the old ceiling. That's all it is. Yeah, right. Kanana is right. Russia obviously knows that is a likely response, and it was used, yes, on Iran. And what was the impact on Iran? Crippled economy and skyrocketing in inflation, right? So anyways. Okay. But again, guys, sort of calm it down. You should know technical analysis here. And don't make normal assumptions. Don't say, well, when you trade a pivot point, this does this and then that goes to there. Be cautious. Go back to yesterday's training. Like, it was very timely where I showed you on a 1-minute chart for 3 hours how to make decisions based on what is actually happening. Not your theory, not your bias, not your outlook, not your hopes and dreams, but what is. And that's what you should be doing now. And that the other message I'm trying to get across to you today is that you might feel like you want to panic, but the market is not panicking. So trade it technically, but don't have basic assumptions either. Okay? You don't need to be on a 5-minute chart, but you could be. Okay? But look how well we are respecting. Let me move this over. Look at how well we are respecting our numbers here. This is stuff we know in advance, like days in advance. Does that look like panic in the street? Not in this market, no. Okay? Adam says most of the oligarchs have their money in Swiss. Look, I think they're diversified. Let's put it that way. Okay? I have spoken to a few Russian billionaires. I know you don't believe me, but it doesn't matter. I don't care. And let's just say they have a lot of money in a lot of places. It's just a normal thing because in most parts of the world, you're like, hey, I'm a billionaire. And they're like, hey, awesome. Let's party with your money. When you say, hey, I'm a Russian billionaire, they're like, wait, you're Russian? Oh, that's going to be a problem. Okay. So they're already used to the challenge. So they're very diversified. They got a lot of money. They're open to a lot of different things, but they also kind of have to invest in a lot of areas. And there's a lot of constraints. There's a sort of a discount for being Russian. So this isn't new, let's say. Okay? It's not new. And so they're already well diversified. So would I say Russians already have all their money in a Swiss bank account? No, they have a lot of bank accounts in a lot of different places. And it's a requirement. It's necessary because of the stigma. Yeah. It's difficult to move money around when you're Russian. Sorry, I'm not making a political statement. I think every Russian with a lot of money would say, "Hoy vey." No, actually it wouldn't. But yes, it's difficult. They would agree. Okay. Cool. So, cool, right? So don't panic, do your job. Don't cry, just dry your eyes, as Snoop Dogg would say. Gold could be bigger than Bitcoin. To me, they're very similar. If you watch my discussion from a couple of days ago, I talk about real assets and when to buy real assets over financial assets. So you should already know this. I already taught you. And if you didn't, go back and watch the video. Which video? I don't know. I've already asked you to take notes. So maybe somebody took notes and posted it. I don't know. Cool. Okay. So what do you think is going to happen today? Well, what you think is actually not that important. It's more like how are you going to play it? What are you going to plan? And let's do this in sort of an orange color first. Why? I don't know why. Okay. There's a scenario that looks like this. Let's do slightly different color. And there's a scenario that looks like this. And I think it's best that you figure that. Okay? So plan it, dude. Plan it. Okay? Then you're going to say to me, Wayne, well, which one is it going to do? I don't know. How the hell would I know? What, I have a crystal ball? I know the future? This is where technical analysis comes in and price action. Okay? So, a buyer buys here and a buyer buys here after the breakout. Just watch yesterday's training. I went through it for 3 hours. Okay? And what would a seller do? Well, not going to sell low. So a seller would sell high or sell here. So it would look like that's a buying opportunity. That's a buying opportunity. That's a selling opportunity. That's a selling opportunity. Which one? I don't know. Brinsley says it's just made a higher high. It could go up. Yeah, it could. So one of the things you want to do, especially on a shorter term chart, is you do want to like pick out all these clusters of tops. Okay? And then I wouldn't overemphasize this. I like the bottom one, right? So what we're playing right now on the small 5-minute chart is that's resistance. Okay, this is the big support. Now you might feel like you want to do this, but I think that's overemphasizing the current bottom. I would just say this is the current bottom. That's the current top. And so now maybe you got something similar where you say that can happen. Right? I guess I should go to a different color. Okay? Or that could happen. Which one? I don't know. Which one? You buy the bottom, sell the top. Wait for the breakout. But these are key levels. Okay? Yeah, Kanana, I know what you're saying, but I don't know. I do enough. I think people should watch the video, and like I ask, you write in the comment section after the video is done. You write in the comment what your key takeaway is, and if you learned something about price action, if you learned something about scalping, you learned something about trapping price, you would record that in the comments. So you could read other people's comments and say, oh, well, that's really interesting. I even suggest that you timestamp some important things so you can go to that video. And the idea here is that you can have this repository of information sitting on YouTube where you can go into your comments and search scalping, and it pulls up all the videos I've done discussing scalping based on the comments that you left. And if you timestamp where in the video I talk about scalping, you can just like log into YouTube, right? Do a search for your comments, find all the videos on scalping. You can say, I think it was this one. You click on it. There's a timestamp. Boom, you go right to there. And within like 12 seconds, you're right to the point. And you have a hardcore repository of knowledge. You have access to 20 years of Forex trading experience at your fingertips. But very few people take that advice, of course, right? Yeah. Yeah, cool. So wink, wink, nudge, nudge, everybody. That was a suggestion. Oh, wait, he's suggesting it now. Cool. So this is a big move, but it's not a ridiculous move. So these are 5-minute candles. And right now, they're basically 100 pips each. So I have 200 pips on these two pissy little trades that I did on a 5-minute chart. Those are two scalps. Okay? Yeah, Mark, it's usually up in the, it takes me probably a half an hour to go through the whole process. So, yeah, it's up there, man. Oh, I'm tired. Oof. Now, I want you to look at this 5-minute chart. Can you see multiple trades that you could have done to the downside? And what would you have done if you were sell only? I think a lot of people get into trouble because they're buyers and sellers. And I don't think you can swing both ways like a broken gate. So can you see the trades you would have done? Now, some of these you might look at and you're like, man, I got to be perfect if I'm going to sell that. I'm not asking you to be perfect, right? In that scenario, this is the obvious trade, okay? Because it's doing this, and then it does this. And you should know how to take that down. And it's probably something I talked about yesterday as well, right? Wayne, your book, which is, despite it being 2008, it still applies amazingly. Do you suggest any other books? I haven't read any books on trading. When I started to trade Forex, there were no books on Forex. So I've never read a book on Forex. The second thing is, well, what about technical analysis? Because that would have been applied to all kinds of investing, right? No, when I started trading Forex, people didn't use technical analysis. Okay? So I knew some people that were professional money managers. Okay, they managed, I think at the time, about $300 million. And they laughed in my face. It was a little bit rude, certainly arrogant, but there was two things. One, I was interested in Forex, which is a scam for losers, okay? And the other thing that was really funny to them was I used charts, and it was market timing, and they just literally thought I was stupid. So imagine going out finding a book on how to do that when the entire industry of professionals would laugh in your face about how ridiculous you were to use charts and trade Forex. Clearly, I was an idiot. So, which books have I read? I haven't read any books. So, some of you guys, which is interesting because I mentor some of you guys, or coach some of you guys, and people have names for stuff. And, well, since I haven't read stuff and nobody taught me how to trade, I don't know these names. And you're like, oh, well, that's just, oh, like yesterday, someone's like, oh, well, that's a measured move. I'm like, oh, well, that makes sense, right? Because I measured that out and that predicts that. I get that. That's a measured move. But I learned that from studying charts 18 hours a day. And I kind of figured it out. But I didn't know there was a name for it, right? So I came up with, I used to have names like frequency and stuff, but that means something else now to somebody else. I looked at it through observation of how, Fibonacci retracements and extensions speed up and slow down and are useful observations. But I'm self-taught by hardcore analysis and observation, reflection, testing, analyzing, and adjusting and testing again. So I don't really have one. I guess the one book I did read was about you have to understand, like, I never traded anything before Forex. I wasn't a stock trader. I wasn't a commodities trader. And I was interested in news because I learned about non-farm payrolls because one day I was sitting in front of my terminal. I didn't even have charts open. And prices jumped 300 pips. And so I Googled, and I think even Google was a startup. Maybe I asked Jeeves. And I'm like, what just happened? And it turns out there was some sort of government news release called non-farm payrolls. And I'm like, holy crap. There's news? Like, I'm telling you, really? Like, this stuff, holy crap, this is crazy. So I bought a book by, I think his name is Gerard Baumhole. And it was on economic indicators. And I read that because I wanted to know what non-farm payrolls was. And I think I have it in my bookcase here. No, I have it in a different library. But yeah, you'll have to look at it. How long did it take me? It took me years. I traded for, I think it was 2 years on a demo account. You have to understand my plight, actually. Forex was a very, very difficult dilemma for me. Okay, most people get into Forex because they got no money and they want to get rich. The second thing is they hate their job, lost their job, whatever. Okay, or retired from their job. I had my dream job. Okay. So imagine, you guys have probably watched Shark Tank. That is exactly what I did. Okay. I had 2 assistants, right? We filter out a whole bunch of people trying to get into our firm. And then some were hand selected and we set up appointments. And I'd walk into the office and every day I'd have at least 5 manila folders sitting on my desk. And inside was patents and all the relevant information regarding these patents. Sometimes they were thin, very often it was thick, and sometimes we had prototypes that had been sent in. They would all sort of be pre-filtered and all that kind of stuff. And by the time it got to my desk, we were into it. And then I would look at it. I would call the entrepreneur, and we'd discuss it. And I'd probably have an hour and a half conversation with them to see, like, what the hell's the point? Like, what is this? Okay. And then if I liked it, I would then go to my marketing department. We had a marketing research department made up of MBAs and PhDs, depending on the type of market. So we might do a deep dive, or sometimes we just do like market analysis. And I'm like, hey, look at this idea. I'm kind of into it. Here's the patent. Here's what they're trying to do. Here's what I think we could do. Do some general analysis. And so anyways, I'd have the research guys do their stuff. And we might come back and do some analysis like, yeah, man, this could be, a $37 million a year marketplace if this product was reasonably successful. So I'm like, maybe I'm into it, maybe I'm not. So if I'm into it, I'd call back, get some more data, run some ideas back. Have you thought of this? Have you tried that? What about this? And if it looked like it was cool, I would fly the entrepreneur out again. And if they had more material, more research, all that kind of stuff, they come out, we want to meet the patent holder and go through that sort of technology, that kind of stuff, have some of the senior people meet with them. And again, what I was actually doing is preparing for a pitch that I'd give to the board of investors of why I think this was a good investment for our firm. So on and so forth. You see how cool that is? And once based on my market research and my data and my ideas and what and all that kind of stuff, if I can convince the board to invest, we'd bring the patent holder back out. Maybe it's the same day that they were visiting. Maybe it's a second visit, and we would move forward to take over the intellectual property. Okay. When I joined the firm, there was maybe 20 employees. When I left the firm, there were about 300. We took over 2 entire floors of a skyscraper. Okay. And I quit so I could be a Forex trader. You understand like the dilemma of that? I quit. I gave up health benefits, for crying out loud. Okay? I managed a team of 10 people. My team made, I made 100 deals. I did 100 deals. So the team must have been 200 deals. And I gave that up to be a Forex trader. Because while I was doing that, I was trading Forex. Okay? At a time when like even cell phones were new. I don't know. Well, maybe not. But I had fancy cell phones my whole entire life. But anyways. So, yeah. So, not an easy thing. But you have to understand, back in those days, there just wasn't information. Even the idea of Forex was a new concept. Because Forex was for banks. Okay? You understand? Forex is for banks. It was not ever a retail, or even very few institutional investors had really access to it, nor did, like, you used other means to hedge, but maybe a large institution, a large corporation might use Forex to hedge their foreign exchange risk, but it was generally just a sort of a banking thing, a transactional thing. There were no codes on the IRS books to deal with somebody trying to make money on changing prices in Forex. Do you think about that? It never occurred to the IRS that someone would do foreign exchange to make money. Corporations like Nike and Coca-Cola moving money back and forth around the world, they didn't look at a chart and like, let's make some money. They just moved the money. So sometimes they accidentally made money, and sometimes they accidentally lost money, and it all got washed out in the tax treatment because it wasn't the point of the transaction. So like, even to the Internal Revenue Service, it was so new, like, wait, what? You're doing Forex to make money? Well, we don't know what to do here. Yes, we have a swing trade. Excuse me. Yes, we have a swing trading group at 4 p.m. We are meeting to set up next week and really next month. Okay. This is probably why you held a demo account for 2 years. Well, I didn't want to leave my job, so I better be pretty freaking good if I'm going to give up my dream job, guaranteed cash in the bank, health benefits, and a beautiful office. My wife still bugs me because when I decorated my office, I had a theme. I said, my idiom. I have to have an idiom. So like, I decorated my beautiful office, big, beautiful office, 3 big, beautiful windows looking over the San Francisco Bay. And like, we were literally 2 blocks from the San Francisco Bay, but I think my office was on like the 30th floor or something. So we were way over the other buildings. So I had this unobstructed view of the San Francisco Bay and the Bay Bridge and Treasure Island. Oh my God, it was nice. So I was living large and in charge, doing something I thought was enjoyable and intellectually interesting. I mean, that's what I like about Forex, right? It was intellectually interesting and challenging. And of the 5 or 10 or 15 deals I'm looking at on any given day, they're all completely different. And so you had to be good at everything and ask amazing questions and be inquisitive and drive for excellence. I'm like, dude. And then suddenly I'm going to wake up and quit? Like, quit? Why the hell would you quit that? So, yeah, it was a big deal because, the reason I quit was Forex was better. But it wasn't, a quick decision. Some of you guys are holding trades long. That's great. I'll remind you that in this 3-month period of January, February, and March, the general standard operating procedure was buy US dollar. Now, inside of that, there are periods that dollar would weaken. There's a false rally, then there's the February open. So even though, like, for example, I'm a dollar bull this quarter, and definitely starting January, we crushed it. But in the first minute of February, I sold the dollar. And those trades went up in about 3 or 4 days, went up about 300 pips. And I remember telling people, like, I'm exhausted. That took so much energy to prepare for that, an emotion, if you want to call it that, to get out of performing trades, stop and instantly reverse against those old positions. Now you went from short euro dollar to long euro dollar, and you're like, but there's nothing on the chart that suggests it's going to happen. I'm like, I know. 3 days later, I'm up 300 pips, and I told everybody, I'm getting out of these trades, and I'm exhausted, exhausted. That took so much energy. But I said, look, February was supposed to open up. Dollar was supposed to be weak. Now it's up 300 pips. And I'm like, the problem is that might be it for the month. It happened that quick. Like, it doesn't always happen that quick, but that's enough. That's probably enough. So I got out of those trades, and then what? The resumption of dollar strength has come back, which is seasonal. Okay? Can anybody confirm that we had discussions like that, like very open, honest? I'm about to stop and reverse. I just stopped and reversed. Now I'm up all these pips. Now I have to get out. I'm super exhausted. I'm fried because that took so much mental and emotional power. And now we're back to the resumption of the prevailing trend of dollar strength. And Robin, right? So you guys know, but then you also know my general assumption of when we're going to get out of buying dollar. Okay? Okay? Yeah. Cool. So good. Again, that's a useful tool for learning, right? Okay? Is that the turn? You see it? So now we're in the moment of truth, right? The moment of truth, yo. Right. Peter says, yeah, Monday, Tuesday, Wednesday, bullish, and then out, right? And that's why the swing trading group meets on Thursdays, because we're usually already done our trades. Most of our trades are entered Fridays or Mondays, and we're done by Wednesday, Thursday. That's it. So I invite you to join the group. It's $99 a month. It's not outrageously expensive. Okay? Do 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 do. Whew. Once again, I'm exhausted. Raymond wanted to talk about the stock market. You still around, Raymond? Ray? Nope. Oh, he gone. Yeah, I put in an order a month ago to buy the S&P 500 at 4,000. But I did, like I said, I did it a month ago. Cool. Yeah, we did that already, though. We did gold and oil already. Okay. Right now, I'm reviewing again with you guys the price action. Okay. Here's my top. Look at my bottom. Price just bounced, right? The question is, what do you do next if you're like, bears are probably looking here and bears are looking here, right? So this goes back to the old, A and B scenario. Oh, there he is. Yeah, so anyways, Raymond, that's what I bought the S&P 500. Well, I have a limit order or entry order, whatever. I have an order to buy the S&P 500 at 4,000. So I thought I'd just buy everything is the idea. So picking individual stocks, I just okay, buy everything. So here's where we are. And you have to ask yourself, where do you think this is going to be at the end of the day? I don't know the future, and I'm not here to tell you what I think the future is. I'm teaching you how to make your own decisions. So if you think we're doing something like this, then that's what you should be preparing for now. Okay? Okay, think about it. These two little trades I made yesterday on a 5-minute scalp are up 100 pips each. So you should be doing what I taught you yesterday here. Well, Wayne, why don't you make the decision for me? Because you don't pay me to make that decision for you. Okay? Okay, if you connect the dots here, you can see the big change. Okay. And there's so much to this that, again, I look at, and it's not panic. Okay, I look at this right here, and that's the price in which we believed price would fall. If you don't know that, then you just don't know. Okay. Okay, there's the two entries for the month, for the week. There's target 1 and target 2 for the week. Okay. Remember yesterday, I drew these two red lines to represent breakout and pullback. This is the most important information on that chart right there. Well, that and, okay, as far as yesterday, this top, the square area, rectangle area, says there's a very high likelihood traders are going to get out. The breach of support tells you this is technically bearish. Look at, I even have the price, of which the bearishness will stop, rally up, roll reversal, done. So again, I invite you to watch that yesterday. I can't quite see this now. 83.25.7. Okay, 83 and a quarter. Hits that. Comes up, hits the roll reversal, and I drew these boxes before it even started falling. Boom. So this says it's probably going to happen. The lower low says it's happening, and then there's your entry. And we did it on a 5-minute frickin' chart. Okay. Same here where I got support, 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 and now we have a bullish engulfing candle. Cool. Yeah, there seems to be a lag in the comments, huh? All right, well, we'll go slow. Cool Modi, man. Question is this our new top? Remember, bears sell at resistance, bulls buy at support. Amateurs do some crap in the middle that makes no sense. That's right, Blue Boy. And so, again, yeah, I covered it today, but last night I covered it in the day trading group before it broke out. And the thing we talked about was the spread between Brent and WTI reflecting a buildup in potential risk premium. So remember, if bears sell at resistance, the only question is, what do you think is resistance? This line or that line? That's it. Bernd wants to know my thoughts on Bitcoin for the next few weeks. Depends if the market is in risk on or risk off mode. Okay. So I would say, let's say down in March, up in April, if that's clear enough. Well, Scotty, you caught the Aussie short yesterday, so you got to be grateful for what you have. So cool. 120 viewers, 97 likes. Thank you, everybody. I appreciate that you did that. It tells YouTube this is quality content, and it means to me that this is a worthy use of my time. We're approaching 2 hours for the webinar, or the live stream, which is more than I usually do. So, how about this? Do you guys mind if I play royalty-free music while we go through the price action? So, like, let's say much of the discussion is now over, but we can move over to sort of like let it do its thing mode. Okay. Also, maybe we can try a test as well. Does someone want to try logging into the day trading room and see if I can bring you into the YouTube live stream? That means someone's going to see your pretty face. We discussed the possibility of me bringing more people in, which would be a good learning experience for them, but also perhaps sort of interesting oversight for YouTubers. I think maybe we could all benefit. So, yeah. So I opened the day trading room if you guys want to join. But if you're going to join, keep your camera on, Jim. He's wait. There you go. And all right, we'll see if anybody else joins. Okay, Jim's in. Anybody else?
Had to get properly prepared. Had to get properly prepared.
Oh no, we got our echo going. No, how do I stop the echo? We got our echo going. How funny. How do I stop that? Yeah. All right, cool. It's stopped. All right, other people logging in. All right, how do I change this view? There we go. Cool. Oh. How do we set this up so it's not too intrusive? Hey, everybody. Coolio, sitting on a 1 minute chart. I can get some music going. Okay, let me find some royalty-free music. Oh, maybe a breach to the top. Oh, oh. What's the next level? What's the next level? It's this one here. How come gallery view is not that great? Why does it only show 4 people? Anyways, there's the next level that we identified here. Beautiful kick off our bottom though, huh? Okay, this is supposed to be royalty-free, lo-fi, chill beats.
Liftoff of mission 41B, the first flight of the orbital Discovery, and the shuttle has cleared the tower.
Cool, just chilling, man. Yeah!
Discovery's core computers now have primary control of critical vehicle functions.
Okay. Make sure you have all your connections. Where's the next one? Which is the central pivot point, by the way, weekly central pivot point. So, 7 people logged in, but only 4 people turned their camera on. Guys, if you've logged in, there's no sense of logging in without a camera. Turn your camera on. There should be 7 people up there. This is so funny. Hey, you can watch me in Zoom and YouTube at the same time. Oh my God. What's up, RJ? Richard Spencer, quick question. How do you control emotions? Trade planning. It goes all the way back to my very, very, very first presentation at the 2005 Forex Trading Expo. I was a keynote speaker. Probably the slide after my disclosure statement was, the whole point of trade planning is to control your emotions. Yeah, Victor, I got knocked out. I was in at 42 or something. Makes sense. I got 3% internal rate of return though on interest. You know, it's only $3 million profit, but you know. Right on, Darko's in the room. That's good. The team's here. Yeah, full yard. Leverage 100 to 1. 100 billion. Yeah, no, I'm joking, Alistair. No, I'm joking. All right, look at that. Boop, boop, boop. Do a little zoom in. Could be a rabbit. That makes it interesting. If that ends up being the top, that'd be interesting. Because that's going to set the top and the bottom of the market. The bottom we already know. Dude, I'm so tired, my eyes are watering. That's crazy. No, I'm not a big silver trader, but right, I don't see a big being a like the silver trader part. It's the same as anything else, really. David Pegler used to like trading silver, and he probably still does. Remember, I taught him how to trade, and he's a great trader. Back inside the range. Okay. For it to become legit, we now need to break. We need to break through this to confirm it. Okay. I still think this is the good number, but someone might be playing that. So really, a drop below this makes it much more legit, and then of course again round trip back to the bottom. So the way I mark these things is either through the rectangle or doing something like that. Coolio. It's kind of neat. So we don't trade breakouts? Well, it depends on what you define as a breakout. Lower the music, okay. Okay, so for example, you might define breakouts on a 15-minute chart. Okay, a wick isn't a breakout, for example. Like, here's what I taught you like 30 minutes ago. let's repeat. Okay. Bulls buy here and bulls buy here. Meaning you need this. Okay? Trading a candle through it doesn't mean anything. A candle breaking through doesn't mean anything. You need up, up, for example, and then down, down, and then you can buy the roll reversal. Well, that hasn't occurred, not even on a filthy, stinking, no good 5-minute chart. Okay? So if you're going to be aggressive buying, why didn't you buy it down here? Oh, I thought it was going to fall. Then why did you buy it here? I thought it was going up. Well, your thinking is backwards. So you should learn how to stand on your hands. Right? Or turn your monitor upside down or something. I don't, you're thinking backwards. Okay? Bulls buy here. Bulls buy here after the break. Okay? So that's how you trade a breakout. Okay? So bears sell here, and a bear will sell here. Okay? Which is the reason why you don't buy something like that. Because it's inside, right? Like what's happening here is bulls have bought, and what did they do? They hit a bunch of sell orders. Why? That's where a bear would sell. That's the whole point of technical analysis. Okay? So if you don't want to like trigger a bunch of sell orders with your purchase, well then, are there sell orders here on support? No. Because it's support. Bears don't sell at support. So again, make sure you're doing the right thing. You buy at the bottom, you sell at the top. That's the basics. And then if it breaks support, catch the roll reversal. If it breaks resistance, catch the roll reversal. Right? Yeah, let me promote the royalty-free music, YouTube. It's royalty-free. That's what they tell me, YouTube. This is the royalty-free music. Royalty-free. It seems like if I hum a tune, I get red flagged for copyright infringement, even if it's royalty-free, even if I'm humming a tune. So anyways, there you go, YouTube. It's royalty-free. Because you know they listen, right? They don't listen, but there's an algorithm doing the closed captioning. And therefore, then they're looking for infringements through just the language. So that's why I have to verbally say it. All right, this will be interesting as far as heading back down to the bottom of the range. Okay. Okay. Because you know what a bear is thinking, right? Right? That's what a bear is thinking. Hua? So if it doesn't do that, then you understand, hey, that's not what they're thinking, but you should be able to compute what their plan is, even on a stupid 5-minute chart. Looks like we formed our range as well. That was important. I already got the range on the bottom here. That's the close of the New York Open. Right? We set our range. And you're like, well, why is that important? Well, if I go back to like a 15-minute chart, it's important for a couple of reasons. If you look here, there's the Open of Europe, and now the Open of New York is lower. Not tremendously bullish. You know what I'm talking about? But also, like, what could happen? Here's Asia Open. We breached through the bottom of it, and later it became a selling opportunity. So whoever said, hey, wait, we don't trade breakouts? Yeah, but that's how you trade a breakout. Now, if you want to get really into it, you take this breakout candle, which is a 15-minute chart, by the way, not a 5, and then it rallied back up, and then the next candle, if you see, gave you your breakout roll reversal. But you might have had to wait 20 minutes for that, maybe even close to a half an hour, which is forever if you're a scalper. which means you might have traded the early breakout and then gave it all back on the way back and then missed the actual move. So I like to pay attention to these levels. Oh, the algo's in the house. Right on. Was that right? Awesome, Victor. You happen to have a link. Is it that late already? London close? No, London closes in 90 minutes. Well, Brinsley says, oh, so the breakout candle closes above the range and then use the wick for the start of the next one. Depending on the time frame. On a 5-minute, no. On a 4-hour, probably. Okay. Thank you, Victor. I think it opened somewhere. Yeah, the YouTube one popped up better. What? Oh, I clicked on Darko's link. I'm like, wait, that's on Bank of Mexico. Yeah, I love the Bank of Mexico reports. They're just so beautifully written. And then you compare that, like I've done that before, where I compared the emerging markets and I compared the Bank of Mexico to the Central Bank of South Africa. And the South African reports are terrible. Just terrible. And then you go to Bank of Mexico and they're beautiful. No, but it closes on the half-hour burn. 4:30. Yeah, but it's weird though. Hey, Alistair? You're like, wait, you don't have enough talent at the central bank to... Like, I see things like reading the South African reports where they have a chart and it doesn't fit on the page well, so they shrink the aspect ratio and squish it onto. I'm like, dude, what are you, like, 9th grade, report? Like, a 9th grader would do that. Like, come on, like, dude, come on. Just seriously, come on. But like, here's the one that we pulled up. It's good. This is really nice information, actually, right? See, I love the central bank. I love the Bank of Mexico. Change in selected financial indicators. They're breaking it down. 2-year government yield. Up, neutral. Currencies. Pound appreciated, Kiwi getting crushed. Very nice. Nasdaq getting crushed, Shanghai getting crushed. Spain up, UK up. Interesting. 10-year yields, Italy. Interest rates rising fast and furious, right? Again, what does this tell us? We're reading a report by PhDs sitting at the Bank of Mexico, and they're telling us that interest rates are not rising, nor are they likely to rise in Japan. Cool. And we're not even reading a report from the Bank of Japan. Cool. Love it. What's up, E-Ducks? Yeah, we're caught in here now. Robin and Steelin in the house. Yeah, we can look at that like stock market. I'm much more interested in the bond market. Okay. So if Americans were freaking out, okay? If Americans were freaking out, they would dump the stock market, buy the bond market. And if they're buying the bond market, the 10-year T-note, especially under duress, right, would quote unquote crash. The yield on the 10-year T-note would go down, prices would go up. So this would have dropped to like 1.75 today. Well, let's go look at the last month of the 10-year T-note. Okay, a month ago we were at 1.77. We tickled 2.0 once or twice, which makes sense because that's psychological, and we're down a bit. Like blood in the streets, shock and awe? No. So there hasn't been a flee to safety here in the bond market. Now, maybe in a 2-year. So when you're talking about an inverted yield curve, they're buying 2 years, they're not buying 10 years. Okay? So maybe the 2-year has moved more. But that means they're not thinking it's long term. Okay? S&P 500 down 1.5. NASI down 1.3. Okay? The big mover is oil. Euro weaker. They would be the one that get hit the most. Germany pays a lot of money. I think it's $700 billion a year to Russia. So what we want to do is cut Russia off from that 700 billion, but then what's Germany going to do? Well, Biden will give them free money, and it's cool. It's only 700 billion. Shoot. Bill. Come on, Biden. Okay. So anyways, so euro down a lot. Yen up modestly. Dixie up modestly. But dude, 1.25%? That doesn't smell like the end of the world. Australian dollar taken down because it's a commodity play. Okay. Or just needed to come down. Okay. People are buying dollar. Okay. That's it. People are buying dollar. People are buying yen. That's about that. So my whole point here is not the end of the world, right? If we go back to the US and then look at the S&P 500, let's move over there. Look at it a month. Okay. So a month ago, I put in an order and I said, buy it at 4,000. Cool. A month ago. I had saved the money 4 months ago. Entered the order 1 month ago. Cool. Seems to me I had the price coming down 3-4 months ago. Yep. I'm going to buy it. And it'll move around for probably 3-4 weeks. I probably won't make any money. But 5 years from now, I will have it. I will have money. That will be profitable. Cool. Okay. Look like a clown for a week. Look like a king forever after. Cool. We got so many people logged in now. It's changed the aspect ratio. Cool. Dwayne's in the house. Cool, man. That's right, Richard. I said 10 to 20%. Cool. So this is actually just really doing nothing, which is, I think, quite interesting in regards to the geopolitical risk. So, right? How long will the war influence? I don't know. So this is why we're doing technical analysis, right? So again, this thing dropped when it was new news. I think it started about 11:30 last night, if I remember correctly. But even at, what time was it? 9 o'clock last night? I think it was Jim or Victor posted like, oh yeah, the attack is imminent. It's going to happen now. Like, we're already talking about it. And then by 11:30, yeah, we got our yen, we got our dollar. And then by the time Europe opened, it was already over. And I'll remind you that what I said at the beginning of this stream is it's not the end of the world. There's no panic. This is all logic. All these prices make sense. Okay. Interesting. So we can take a look around. Oil down. So mark your lines. Okay, mark your lines. Let's just do it academically. Pick every line. Guess that's the same. Okay? And we know the market is paying attention to these pivot levels. They're mechanical levels, if you will. We clearly paid attention here. We clearly paid attention here. Okay? All of this is interesting. All of this was interesting because that's an M4. So that's why this occurred. That's why that occurred. So the question is, do all these players see the R2? Yeah. Could they use that as your support? Well, they see it, so sure, it's fair game. The next one would be here. That's price. See, this is, remember how I broke it down earlier? That line is a price line based on market, but we'll leave it at that. And then this is a market line. What I mean by price line is you'll say, well, Wayne, that's an M4. Yeah. But what occurred, the other part I'm looking at is there's a double top there where there's no double top here, right? So I'm just saying, so you could argue that that's a price line and this is a market line, and both are fair. If people want this to go up, they'll buy it. Remember, bulls buy low, right? So let's define low. That's a low and that's a low. M4 is a conservative target for bulls. Okay? So now you would analyze that, and maybe you do it here. So you can attack this. Okay? So what do you see right now? There's the US stock market open. Okay? And there's a key price here. Now we're trading crude oil. See? All day long. You can just sit on these charts all day long. If you're a bull, you sell high in a falling market. If you're, right? No, I said that backwards, didn't I? If you're a bear, you sell high in a falling market. If you're a bull, you buy low in a rising market. If you're a pig, you do something else. Probably something in the middle, and you get slaughtered. Okay, can you guys see the potential for future downward moves? And of course, breaking above would be technically important, wouldn't it? The other thing I would do is I would mark this bottom now. That's the low of the US Open. And then of course you can mark this the high of the US Open. It might be important later in the future, like 8 hours from now. Okay. So you have to go back though. What do you think is going to happen? Is this going to go back up today? If you don't have that answer, then all of this is irrelevant. Okay? You must understand that. You can't just drop in and say, I'm price only. Because what will happen is you'll probably be right as many times as you're wrong. You'll get on win streaks of win 5, and then you'll get on losing streaks, and you'll just give it back because there's no consistency in your analysis. How could your results be consistent? It's a fool's errand, in my opinion. So you have to say, you could say something like, Wayne, I think WTI is going higher. Okay, we tickled 100, but we're going to 120. Cool. So do you buy it now? No, it's falling. When do you decide to buy? What if it did this? Yeah, then buy here. What if it did this? Yeah, we'll buy there. But what if it keeps falling? Don't buy it. If you're a bull, you're allowed to buy double bottoms and lower highs. You can buy a double bottom or you can buy, right, a lower, a higher low. That's it. Don't overcomplicate things. Most people have tried other things than that. And they don't work, do they? Yeah, tried it and failed, yeah. But you got to be patient, right? This is what we do. Even on a 5-minute chart, this is slow as molasses, right? So the danger, of course, is you do something other than what I just showed you. So if you're a bear, you're a bear. If you're a bull, you're a bull. Okay? Now, why did I draw this? Because there's pretty reasonable chance that we do this, and then we do this. So you have to back out. Now, what if these are days, right? So here's your low and your open. Here's your high. And let's say we close here. Okay? So now you have your candle. Okay, so what do you see here? Green to about here with a wick. And then you might assume from here up. And that tomorrow's candle would be green. See, this is green. And then you're assuming tomorrow's candle is green. And I think what a lot of people do is they forget that they're setting up tomorrow. They're staring at a 5-minute chart and they're just trying to sell lower highs and lower lows. And that's pretty mediocre. Okay, if it was that easy, every Forex trader would be filthy stinking rich. But the thing is, what you find is there's fractal geometry to what we do. So in here you got lower lows and then higher highs and then lower lows and then higher highs and then lower lows and then consolidation and then a higher high and then lower low. And what it's doing is it's doing higher highs and higher lows on, let's say, 4 different time frames, let's say, but we know it's all time frames, right? And so you're missing the fact that this dip is probably just a buy. And so what happens is price action only people on some time frame are still buying this, and then that didn't work out, so now they're selling and they think it's going down here, but then it reverses and goes this way, and they're like, man, it's these market makers and my broker trading against me. And I'm like, no, it's not. Okay. Cool. So right now it's falling. So there's a pretty reasonable chance of this. Okay. And maybe we get here US close or Asia open. What? Maybe. So that would be a theory. So now you got to drop in and confirm it with this technical analysis. And so because it's not likely bullish yet, maybe it is. We don't know. Technical analysis will tell us if it's turned bullish. But if it's bearish, you're selling here or you're selling there. Okay. Cool. Pretty amazing move here. You see the down, the up. Cool. Down, up. This is a definite sell. Down, up, down, up, down, up, down, up. Okay, this is a roll reversal off probably this zone. Higher high, higher low, higher high, higher low, higher high, double bottom, double top, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, big pullback, lower low, lower low, lower low, lower low, lower low. So what do you think of something like this? Well, you'd have to believe it's going down further. That would shape, okay? That would shape your decision-making process. And by the way, everyone, thanks for hanging with me. I appreciate that. I've been doing long streams lately, so thanks for hanging with that format. Okay, where do you think the support is? Looking at this 1 hour, can you see it? What you want to do is kind of connect these tops. There's a top, there's a top, there's a top, there's a top, there's a top. Okay, there's a range. You see it? Drop into the 5 minute. Okay. So where do bulls buy? Okay, for them, that's the beginning of a roll reversal. So there's that, or they could buy a double bottom, or they can buy a breakout pullback. Okay, but realize that it has to start at support. So what I just went back is old resistance in gold has the potential to become support now in the future. Bulls would buy that price. Okay, bears will take it down. This is very bearish. Okay, and this potentially can become bullish. Not that it will. It'll be very informative if gold dropped below that. Okay, then you're like, whoa, we just took out, because what'll happen, like, think of it, if there are bulls here, there's an order sitting there. Their stops are just below that somewhere, right? So if we come around and take that out and start hitting these stops, those stops are stop orders to protect bullish orders. So the stops are sell orders. It's the bulls selling because they bought, but then price is falling. So then they sell to offset their long, but they're still sell orders. There's sell orders below there. So if a bear catches this and there's more bears and bulls, it's going to push it lower. It's going to hit all these stops and we're going to execute down. Kind of like this sucker here, right? Now, if you're a bear, where are your orders? Well, you're going to sell here. What? Okay. And your stops are going to be here or even up here, depending on your time frame of decision making, right? So a bear is going to try this and take it down, and if the bear's lucky, he's going to hit all those sell orders and it's going to snowball. Right on. Thank you, Richard. I appreciate that. It's interesting. I don't think I've gotten any new subscribers recently. It used to go ching, somebody just subscribed, but it doesn't do that anymore. Must have turned it off on my OBS. Okay. So you guys are bullish on this or bear? What do you guys think? I think there are legit bulls here, and I think there are legit bears there. Cool, Brinsley. Hey, Richard, you can contribute to the Wine and Cigar Club. You get your name in writing. Yeah, Richard, so he's like, yeah, I'm still a bull because of the tension. Cool. Then this... Right, that analysis is it's fallen far enough. Again, you see how it connected all these things? Look how quickly, chow. See, that's where I think people kind of mess up. They spend some time looking at the daily chart. They spend some time on the 4-hour. Then they drop into a 15-minute or a 5-minute, and then they forget everything else. And then they're like, I sell, right? I sell lower highs forever. Yeah. Okay. Yeah. But you can't ignore the higher time frames either. So you got to like have it a little bit more refined where you say, okay, it can come down to about here. It can come down to about here. So then you mark these charts like I did here. And then you drop back into your Fiverr and you have this reminder on your chart to say, whoa, 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 whoa. We're at support. Someone's going to buy it at support, right? Like we know somebody, even if it's a dumb idea, somebody's going to buy it there. Okay. right? Even if it's a dumb idea, somebody's going to buy it. It's like the advice I got from a previous boss of mine. He said, Wayne, no matter how ugly you are, there will always be a woman desperate enough to marry you. And I said, oh, that's so kind. Thank you. Okay? So no matter how dumb buying there is, and I'm not saying it's dumb, but let's just pretend it is dumb. It's clearly support. Somebody's going to buy that. See ya, Robin. Robin and providing. Yeah. What, yeah. I'm like, that's really weird advice. That guy was a nutcase. Okay, zoom in. What you should be looking for is a change in direction, change in trend. Okay? For example, if you are now a bear, or you are a bear, but its price action is bullish, you're going to look for something like this. Okay? So if that's going to happen, remember it's an if-then statement. If this is going to happen, when do you recognize it? Yeah, I'm going to need to take a nap so I have enough energy to do the swing trading group. It's at 4. It's early. So Molly, you need to make that decision. Molly's like, hey, these are unusual circumstances. Yes. Gold might not drop. Correct. Okay? So someone that thinks the sell-off is, I don't know, short-term correction and short-term imbalances, whatever, then this was your buying opportunity. And so you're looking for something different. Higher high, higher low, that's a buy. Higher high, higher low, roll reversal, that's a buy. And you're expecting that type of price action to continue. Okay? So getting above this resistance area is technically important. It would more or less confirm that, at least on this short term. Okay? Demo says he bought there. Like, this is okay, this is okay, this is too late, that kind of stuff. If you're going to buy low, you got to buy low. Okay, and the next one would be buy the higher low. But again, I covered this 30 minutes ago, right? Like, those are the two plans. So that, right, you have to ask, if money is entered here, where's the new money going to come from? You need more bulls to buy. Well, you have to hit this first, which takes out the bearish stops and can move you to that next level. So this midpoint is critical. Remember, the bears are the next bulls. They'll get stopped out or they'll exit. Okay? If the bears hold the line and new money comes in, people wanted to be bearish but they missed it, then they're like, well, if it comes back, I'll sell it here. Well, then that's what happens. But this is why I recommend you make decisions beforehand, because other people have already made those decisions. You see? You can't react to their trade plans. You should have a similar trade plan. I want you to think like a boss. How do you join the swing trading group? Join FX Bootcamp and click the upgrade button and you're in. The link is in the description below. Couldn't be easier. Okay. Ooh. Ooh. Interesting. Okay. So what price are we watching? You want to look at this and these. And you'll notice it'll end up being the basis of the next trade. Okay, if it forms. That's why I drew it that way. Oh, well, now I just updated it. But anyways, you get the idea. Do you guys prefer the 1 minute chart or the 5 minute chart? Yeah. Sure. Okay. Well, please note that this is how you should enter every single trade, whether it's a position trade, a swing trade, a carry trade, a day trade, a scalping trade, a market open trade, right? How many years have you heard me say that you need to scalp into your swing trades, scalp into your day trades? You know, for years, my favorite was the 3 minute chart. But I don't know how to do that on MT4. I know you can, but I'm just, I don't know, whatever. I switch back and forth, right? I know you can do it. It's a period adjuster or something. That's interesting, hey, Victor? What's that about, huh? Hackers? Russian hackers, huh? Going after the Fed? Yeah, boy. Yeah, boy. Isn't it cool? Like the red and green candles are following my line perfectly. You know, I spent a year trading the 1 minute chart because somebody told me you couldn't do it. And you know what it taught me? The importance of the 4 hour chart. It's an interesting experience. You're like, wait, what? What? Oh, is that right, Jimmy? Yeah. Yeah, three is fine. Yeah, it's somewhere, it's just somehow in between. But, you know, if you've been doing this as long as I have, it don't it don't matter. I mean, it does, it doesn't. Okay. Ooh, a little bit of indecision on this candle. Somebody's already selling, huh? We'll see if there's enough. Okay. Oh, all right. We're about there now, huh? We'll see what happens. Being very informative. Either way, whether it goes up or down, it'll be informative. You notice that wick actually touched the top? That. So we'll see. Next, I think 5 minutes will be critical. Then I think after that, I'm going to go eat. All these old people trading Forex. Yeah, well, when you live in a rich country, people are old. I was watching a video of people walking through Cuba actually just last night. They walked through Cuba with just a little camera, and they just walked the streets for an hour. Two things I noticed right away. Very little traffic, even on the main roads. Very little traffic. Half of the traffic are taxi cabs because of all the German tourists. Right? And people are young. Right? There are a lot of young people. Just people walking around the streets. Just a lot of young people. You go to a place like northern Vietnam, you go to the cities there, and something like, I don't know, 70% of the population's below the age of 30 or something. So like everybody's young. Well, I wondered about that, Maida, because the other thing I noticed is like young people walking around, a lot of school kids, and people going to work, young adults, 25-year-olds, and then there are people like at 70. I'm like, well, where are all the 15, 60-year-olds? They're all in jail. Shoot, man. Yeah, they're in Miami. Where do I think it'll close today? I don't think. I have conclusions. There's a difference. Look at your pivot points and you'll find the answer. What you should be thinking about, your boy, is tomorrow. This late in New York, I'm not thinking about today. I did that last night, dude. Okay. So it's really so like, for example, in 5 hours, the swing trading group is going to meet. We're going to plan all of next week and probably all of next month. So bottom today in euro dollar. Just look at the pivots. Yeah, you got it. Well, yeah, Maida, that's probably a generational thing, right? When everybody came over. Like if people watch Scarface, right? The beginning of Scarface, where this whole giant migration to South Florida from Cuba. And so how old are those people now, right? So, but it was just, it was an interesting period in American history for sure, and in Cuban history. All right, guys, so this is just farting around now. So now we basically have a mini support and we got a resistance above us. So it's sort of a battle of the bulls and bears at this point. This might have to fart around for another hour. I can't make it another hour. I need to go eat. So for everybody in my swing trading group, I'll see you at 4 o'clock this afternoon to plan out next month, next week. For everybody else, there are links in the description below to join FX Bootcamp, to open up an account at Trader's Way, to buy my book, buy the chart templates, and all that kind of stuff. But I wish you the best. Peace on earth. May the pips be with you. May your profits be above average. And thank you for everybody that logged in with their webcams. It's nice to see your beautiful smiling faces. Supermodels make excellent traders. Cheers. Supermodels.